Hello everyone, welcome back to Listen Singapore News. Today, we're going to talk about the performance of the stock market during past virus outbreak and best index fund. This is Wikipedia. As you can see, the recent fluctuations, ups and downs, are top ranked in history. Now let's look at an article from MarketWatch. Let me tell you first, who is MarketWatch? MarketWatch is a subsidiary of Dow Jones and a company that primarily provides stock market data. I tell you it's well recognized. According to the Dow Jones market data, the S&P posted a gain of 14.59% after the SARS outbreak back in 2002 and 2003. A year after that point, it went up to 20.76%. The table you see shows the date of each epidemic and the stock price changes after 6 months and 1 year. Except for AIDS back in 1981, all of them rose after 6 months, and most of which showed a bigger increase after a year. That being said, 6 months was enough time to recover from panic selling. Putting this into the current situation, COVID-19, since the outbreak began at the end of January, we can assume that the previous stock price before the COVID-19 will be recovered at least approximately by the end of July. Of course, no one knows the future stock price. Let's see the chart with a long breadth of about 50 years since 1970. You will vaguely notice the impact of the virus. Indeed, its impact on the stock market is minimal. Many investment gurus like Warren Buffett and Ray Dalio say it's simply impossible to predict the market. It is called market timing, which is the strategy of making buying or selling decisions by attempting to predict future price movement. In 2007, Warren Buffett issued a challenge to the hedge fund industry. Warren Buffett did in making $1 million bet that he could do better than a portfolio of hedge funds. Buffett invested in Vanguard S&P 500 index fund, and the hedge fund firm invested in the portfolio of 5 hedge funds. Buffett has won the bet. The result was 7% versus 2%, meaning to say the index fund beat the hedge fund. Buffett simply said that by investing in a boring, low-cost stock index fund, you could outperform most hedge funds over the past decade. As a single note, hedge funds and active funds can never beat index fund in a market that goes up in one direction for 10 years without major fluctuations. In general, the performance of hedge funds and active funds is better than that of the index if the fluctuation continues as large as these days. In any cases, index funds are better, which means outperform, with long-term performance of over 10 years for sure. Then a question, who is Vanguard? Vanguard is a company founded by John Bogle, who recently passed away, and this company is the world's second largest fund provider after BlackRock. Buffett's Vanguard fund is one of Vanguard's numerous ETFs. Gonna talk about ETF and index fund a few minutes later. The 3 major firms providing ETFs and index funds are BlackRock's iShares, Vanguard, and DFA. I googled them and a lot of articles are there. Then, what is an index fund and ETF? Index fund is a unit trust that is made to earn as much as the targeted index. For example, you can invest in markets around the world or in developed or emerging countries. Of course, also possible to invest in sectors such as healthcare and the force industry. ETF which is the abbreviation of Exchange Traded Fund, is an investment fund traded on stock exchanges. In the next video, I will show you how to buy ETFs, index and active funds, in Singapore, and how to make your commissions and fees low. Okay, wrap up to 2 lines. 6 months after the date of epidemic, will recover a stock market losses. Buy index fund every month. That's about it. Hopefully you enjoyed. Thanks for watching. Catch you guys in the next one.